Hello, today's Sunday, June 8th, 2025, and I'm Jason Shapiro with CrowdedMarketReport.com. Today I wanted to speak a little bit, a very broad sense at first, about the stock market. And the stock market is an asset that has proven to go up over time. Does it have down moves? Of course. But over time, it goes up, okay? And in my view, there's three reasons why this happens. And truthfully, there's one reason why this happened, which is that as companies grow their earnings, the value of that company goes up, and therefore the stock market goes up. But how is it that companies grow their earnings? It's pretty simple. One, population growth, okay? The more people there are to buy their goods, the more things they sell, the more their earnings go up, right? And that doesn't seem to be anything that's going away anytime soon, right? And that's, very similar to expanding the geographical area of where you sell to, because that's really just population of where you sell to growth. But in general, population growth, right? The second thing I would argue is inflation, okay? As inflation comes, they charge more for their products, and therefore the revenues go up, their profits go up, and the stock goes up, right? The value of the stock goes up. Now, that's not real growth. That's inflationary growth, but it's still growth, and it still makes the value of the asset go higher. And the third thing is productivity growth, right? So in other words, trying to squeeze more profits out of your current revenues. And this has always been, this is sort of the human thing, right? Believing in the human spirit thing. People have always been trying to find ways to squeeze more profits. That is what they're motivated to do. That's how they're going to make more money. That's how their companies are going to make more money. And let's face it, currently with the AI thing, we are theoretically in the middle of the biggest potential productivity growth in history. The people that I hear from that are part of our service, and who are active on our Discord are in all kinds of different industries. And we have had many conversations about AI. A lot of our people are software people, and chip people, and they explain to us what they see going on in the business. But especially in the last 3 to 6 months, we are hearing stories from these people about how their productivity is going up 5 times, 10 times, right? And we see a lot of worry in the market out there right now about the potential of unemployment going up. But that almost seems natural at this point because there's so much productivity being squeezed that companies are able to let go of people and get just as much work done, if not more work done, with less people. Well, that's profit friendly. And as we said in the beginning, profit friendly is good for increasing the value of your company. And that's what I see going on right now. So let me just pull this up. This is the chart of money supply. This is the U.S. money supply. It's on new highs, right? And this doesn't even talk about the velocity of money, which is probably more important, which is how many times that money supply turns over. But money supply alone going up, right? This was a quote this week. China's central bank reverse repo operation injecting $139 billion. That's money supply growth. This is what governments know how to do. And in 2008, that proved it. How did they save the system in 2008? They printed money. They created money supply, right? Which, again, is inflationary, right? And inflation leads to higher prices, which leads to higher profits, right? That doesn't seem to me like it's going away anytime soon because this is what governments do now. They don't care. Are we in a recession? Are we in a depression? Are we in a boom? Are we in a growth? They just print money. You can call it fake if you want, but that's what they're doing. And it's not going to stop anytime soon, right? And then, here's population growth. This is U.S. population growth, not going away. This is global population growth, not going away, right? So population growth, inflation, productivity. None of these are stopping, right? And therefore the market is going to, over time, go up, right? And I know it's very fun and it's very sexy to make money on the short side. And there are times that can happen, but you're fighting over time these three things which continue to push stock market higher, right? So I think that if you're trying to short, and if you're going to be long-term bearish, you better start being long-term bearish on some of these things and watch these things, right? These are slow-moving things. Population growth is clearly a slow-moving thing. Money supply is rough to gauge because we can get the money supply numbers like this one, but it's rough to gauge the velocity of the money supply. But you know, like now, when we see all these markets, the stock market, the US stock market, the European stock markets, the global stock markets, which are on new highs, if you measure global stock markets, right? Gold, silver, palladium, platinum, copper, these things are all up. That's a function of the money supply. Okay, there's clearly no shortage of money supply, and people want to talk about, you know, this lack of liquidity in US bonds, and that shows there's a lack of, there ain't no lack of liquidity out there right now. That's clear. All right. If there was a lack of liquidity, U.S. bonds would be, you know, yielding 10%, not 4.5%, 5%. Okay. And these other markets wouldn't be ripping like this. There's no lack of liquidity here. That's what I'm trying to say. And if we want to really get into it, if we look at the current stock market, okay, so the S&P is at this 6,000 level, and it's irrelevant. That number is irrelevant. It's a random number, just like any other number. But people do have this thing, this roundophobia thing that they like to play. Okay? So let them play it. They want to sell it at 6,000, sell it at 6,000, sell it at 6,000. The market goes down, market goes down. They tried it a few times in the last couple of weeks, right? 1, 2, 3, 4, 5. In my view, the more times they do that, that's just more shorts building up. So that when it does go through that level, which it kind of did on Friday, actually, but a lot of times it'll just gap. And all these people that were trying to short into that will have to run and cover. And that's how we, you know, get a nice breakout. Don't know if that's going to happen on Monday or what. I don't know if we're going to pull back down below 6,000 for the next couple of weeks or whatever. I don't know. I don't have the ability to predict such short-term moves, really. But I think it's something to watch for, because the further it gets away from 6,000, the further it goes up, the more these people, and we know the world has been underweight stocks since this April fall, and they're going to have to chase, right? And that's what creates a breakout. And that's where I think we're at right now, right? And a lot of people saying, okay, we can see new highs, but then it's going to double top here. I just don't believe it. Can it double top there again? Can they do the same thing at 6,200 that they're doing at 6,000? Try to sell it again, sell it again, sell it again, sell it again. And then we'll just gap through that again and run, you know? So just things to watch out for. I do a lot of videos where I try to dissuade people from playing too much on the short side of the stock market. Because what I have learned over time, as someone who did that a lot, was that's the hardest trade there is. The stock market is the one asset that I can think of that over time has upward drift. You could argue that gold does because it has for a while, but there were many, many years where gold went nowhere, right? This is the one asset that over time has upward drift because of these things I'm talking about. So playing from the short side more than you're playing from the long side in particular, over time is a killer. That's what I'll have to say. So think about these things, monitor these things, and be smart and watch your risk, right? And I hope that all helps. If you like the video, please like it and help us spread the word. If you'd like to see more, check us out, crowdedmarketreport.com. And other than that, I hope everybody's doing well. And I hope everybody has a good upcoming week, and we'll talk again next week. Hi, I just wanted to say, if you like daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, you know, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, you know, give it a shot. All right. And we hope to see you there. Thanks.